Friends, I want to also thank the Honorable Commissioner for accepting our request for extending the compliance of CDA. The date of compliance of CDA has been extended up to 20th of September. I am thanking the departmental officers for the same for accepting in this one request. Friends, now the main aim of our association is to educate the member at large and keeping ourselves updated on every field. So we have arranged today's lecture meeting on the burning issue of revised 3CD and recent ITAT judgment on Hawala purchases. Nowadays, life of a tax professional is being shifted to less professional work and more of labor because of the departments who have directly or indirectly shifted their burdens on us, and we are left nothing but to judge the compliance of the same. Now, regarding the due date of revised 3CD, it has been already extended up to 30th November, but still there is no clarity regarding the date of filing of the returns, whether it will be 30th September or still it will be 30th November. And if it is 30th September and if anybody fails to file, I think what would be the consequences? Still the law is still ambiguous. Now coming to today's other part of the study circle meeting is of the ITAT judgment on Hawala purchases. Now I do agree that every judgment is delivered on case-to-case basis, but I am sure that today's learned speaker will guide us on how to prepare for such situation and what are the documentary evidence which we need to keep and maintain before appearing regarding the higher authorities. Lastly, I am also happy to announce that the video streaming of this study circle will be available within 3 days of the completion of this lecture. So members who have missed can take the benefit of the same and they can log on to our HTPM website and they can view the video streaming of the same. And finally, I am thankful to today's learned speaker Sri Devendra ji for sparing his valuable time and accepting our invitation and sharing the views on his subject. And I am sure at the end of this we all will be benefited with the knowledge and his experience. I thank you. Now I request convener Shri Pradeep Ji Kapadia to formally introduce today's learned speaker, Devendra Ji. Thank you.
Good afternoon, friends. Presiding officer, the president of this esteemed association, Sachin Gandhi, and all my professional brothers and sisters. It gives me immense pleasure in introducing today a person for whom I can only say, किन लफ्जों में मैं उनकी तारीफ करूं, वो लफ्जों में कहां समा पाने वाले हैं. A person who has been a rank holder at all levels. He has I'm talking about the CA also, rank holder in CA Foundation, intermediate and final exams. 44th All India rank in CA Foundation. And wow, take a bow. I think, what can you say? 3rd at All India rank in CA Intermediate. I think everyone has to do that. And 41st All India rank in CA Final Exams. A person who has gone through all this will understand the value of this, and the students particularly who are here, who are going through this, can understand what is the value of getting a rank in CA exams. And then he completed his general management program from IIM Calcutta and was awarded Professor T.S. Garewal Award for Best Paper in Advanced Accountancy in CA Intermediate Exam. He is none other than our CA, Devendra Jain. Devendra Jain qualified in May 1999, and since then he is practicing from last 15 years in the field of direct tax, litigation, consultancy and transfer pricing, involved in teaching the subject of direct tax to CA final students, member of the Journal Committee of Bombay Chartered Accountants Society, member of a research and publication committee of Chamber of Income Tax Consultant, co-author of the book on recovery of taxes published by the Chamber of Tax Consultant, and he has been a regular contributor to the articles in professional magazines like BCA Journal, Income Tax Review, taxman, corporate professional today, CCH, direct tax online, Outlook Money, etc., etc., and the list goes on, and has been regularly delivering lectures at various study circles and professional seminars. And above all, what can I say, and very heartening for all our professional, the judgment which was for that Rajiv Kalanthil, which has been for that Hawala purchases. He was the person who has represented, and that person who has brought laurels, I think, a relief to all our professionals by getting that judgment that Hawala purchase, if it is on the site of the sales tax department, it cannot be. That tribunal, Bombay Tribunal judgment which has been recently, so he has been the person who has represented, and I think with this I would request all of you to give a very, very loud applause to Devendra. I would request the President to offer a memento and a flower bouquet as our token of our love and affection and the relief that he has brought for all of us. Devendra Bhai, we are extremely thankful. And I would now request Devendra Bhai, the mic is yours. Thank you.
A very happy Teachers' Day and a very warm good afternoon to the seniors in profession, professional colleagues, and some very young faces, students or freshly qualified persons. At the outset, I would like to express my gratitude to this esteemed organization to give me an opportunity to speak, to give me a platform to share whatever little I know with such a august gathering. And thank you, Mr. Kapadia, for a very kind introduction. I do not deserve such a praise. I just did my duties at whatever level I could. Coming to the topic straight, both the topics allotted to me for today's discussion are very, I would say, a hot topic prevailing. One, because of the recent amendment in the tax audit reports, and the second one regarding that Hawala purchases, and what an occasion to speak on impact of Hawala purchases and income tax assessment in the very building from where it originated. So recent amendments in tax audit report. As we all are aware, tax audit report per se is either in form number 3CA and 3CB. It's a very simple one-page report which just gives a certification that the books of account, profit and loss account, etc. are true and fair. 3CA applies to assessees whose books are otherwise required under any other law. For example, companies who are required to get their accounts statutorily audited. For other persons, 3CB is the relevant audit report. And then 3CD is a common annexer to be attached to both the reports, that is 3CA and 3CB. Technically, the only difference between 3CA and 3CB is that in case of 3CA, because the books are already audited under any other law, what the auditor certifies is that he is relying on those audited books and he is giving the particulars which are required to be reported in 3CD. Whereas in case of 3CB, because the accounts are not audited under other law, he also certifies that the books are audited by him and they give a true and fair view of the balance sheet, P&L, etc. Now, while the notification dated 25th of July 2014, CBDT amended the income tax rules which contains the format for these reports. And they have not only amended 3CD, but they also amended the format of 3CA and 3CB. So 3CA and 3CB are just a one-page report, but a very small amendment in 3CA and 3CB. But mainly our area of concern is regarding the detailed annexure, the reporting which we give in form number 3CD. Earlier there were 32 clauses in form number 3CD, and in the revised version there are 41 clauses. As such, if we compare, there are only 9 additional clauses. But if we go inside all those clauses, sub-clauses, the items, the manner of reporting, what is required to be done by a chartered accountant in that report, that makes a vast difference between the old 3CD and the new 3CD. Coming to first of all this perplexing question on what about the extension of date. After this 3CD was reported, representations were made by various organizations. At the last minute in the month of end of July, they are coming out with a new tax audit report. Various people have already completed the tax audit, have uploaded the tax audit reports, and there are many audits which were already in a WIP stage near completion, and all of a sudden department introduces a new 3CD. They withdraw the old 3CD from their system, and because it is e-filing, we are helpless unless and until the new schema comes. I think schema came somewhere in the month of August. CBDT was kind enough then to accept those requests and issue a new notification dated 20th of August 2014. And coincidentally, that judgment of Rajiv Kalathil was also delivered on the same day. So on 20th of August, they come out with a notification that the tax audit report may be filed till 30th of November. So 2 months extension has been given. Now the perplexing question of what about the return filing dates, which has not been directly extended. In my personal view, and technically if we interpret the various sections, basically the return filing requirement is under section 139(1), and the explanation to 139(1) contains the due date. 44AB is an additional requirement in case of certain people, we are required to furnish the tax audit report. In section 44AB merely refers that it should be submitted on or before the due date mentioned in 139(1). So the genesis of 44AB due date lies in 139(1). And 139(1) date has not been extended. Notification clearly says that it is the date of furnishing the audit report which has been extended. So that is 44AB due date, that is 3CD reporting date which has been extended, and not the return filing date. We can take a corollary from 10 other sections in the Income Tax Act which refer to the due date mentioned in 139(1). Like for example, in section 43B, certain statutory payment they are disallowed if payment is not made by the due date. They also refer to section 139(1). Or for example, you can take that any capital gain exemption 54, 54F, etc. If you are not buying the house or the new property within the due date of return under 139(1), we have to deposit that amount of capital gain in the capital gain account scheme by the due date referred to in 139(1). So the parent due date section is 139(1), and there are other sections which refer to the due date mentioned in 139(1). 44AB is one such section. It refers to the due date mentioned in 139(1). The notification is extending only the 44AB. The interpretation that the mention of 139(1) in that notification or the mention of due date in 139(1) will extend even to return filing. In my personal and humble submission, it will be a far-fetched interpretation, because what has been extended is only 44AB. 44AB is not the parent due date section, it is 139(1) explanation. As a corollary, had 139(1) been extended, then all the due dates of, for example, in 43B or 54 or 44AB, they get automatically extended because those are the sections which refer to 139(1) due date. So had it been a notification extending the due date of filing return of income, then automatically the other due dates get extended, but not vice versa. If there is a notification, for example, tomorrow for extending 54 section deposit in capital gain account scheme, or for say 43BB or something like that, then that per se will not apply to the due date of filing return of income under 139(1). There would be a second angle to it also. Practically, what is required under 139(1) is we have to submit a return of income, and that return of income does not require any signature or any certification from the auditor. Auditor has to certify the books of account. He has to give the information which is required to be mentioned in form number 3CD. It is neither binding on the assessing officer nor binding on the assessee to accept the comments given in 3CD. For example, auditor takes a particular stand that this particular expenditure is disallowable. He might mention in form number 3CD that this expenditure is disallowable. Assessee can still claim that this expenditure is very much allowable, and it is the duty of the assessee to file a correct return. Assessee certifies at the foot of the return in the verification part that the information in this return is true and correct, etc., etc. Auditor nowhere is signing that return 139(1). So assessee can take an independent claim whether that particular expenditure is allowable or not allowable. It has per se nothing to do with the audit certification by the accountant. But naturally, assessees who might not be that much expert in understanding the various allowances and disallowances, and the large taxpayers, particularly non-corporates, who are subjected to audit only because of 44AB, who were otherwise not subjected to any audit. In that scenario, they may rely on the auditor's information in form number 3CD. However, technically that is not the case, that if the auditor certifies that expenditure is disallowable, then only it is disallowable, or vice versa. Therefore, filing of return has nothing to do with the filing of tax audit report. Even by that logic, the due date for filing return of income is not extended. Taking a third angle to that is, even if we say coming to the practical part of it, that in most of the cases computation is also done by chartered accountant only, and therefore return is also called by the chartered accountant who is conducting the tax audit also. Still, what has been amended in form number 3CD per se is there has been no amendment in the law. The substantive provisions of law, expenditure allowable, disallowable, they remain the same. Only the method of presenting that information to the government, instead of in a format A, some new format has come, which is no doubt is very much voluminous. So many details have to be filled up. However, that does not mean that quantification of an expenditure allowable or disallowable should take more time because of a new reporting requirement. New reporting requirement will not alter your position whether that expenditure is allowable or disallowable. When we go through the changes in 3CD, the main crux or the heavy burden voluminous is pertaining to TDS part, where the TDS returns where we have to give so many information. However, those information have actually nothing to do with your quantification of income. So even by that logic, in my humble submission, tax audit date is extended but the return filing date is not extended. We can conclude the audit. The manner of conducting audit, the procedure of conducting audit, there is no change in that. Only the reporting format has been changed, and that might take some additional time. So we should stick to the timeline. We should complete the audit by 30th September. We should find out, quantify the allowances, disallowances, etc. Return can be filed by 30th of September, and then reporting can be done at a later stage. However, representation has been made. Another angle coming from, I think the point number 1, 2, 3 argument which I gave, all were from revenue side. If I speak from practitioner side of view, if the information in 3CD has been changed, then obviously our energy, our time devoted in that gets exhausted in that, and therefore naturally we would expect that there is some time limit extended also for filing return of income. Otherwise, practically it becomes a cumbersome procedure. For example, for client A, I complete the tax audit. For client B, then I complete the tax audit, and so many other clients I complete the tax audit, I file the return. Then after 1 month again, if I have to sit on filing the 3CD or preparing the 3CD of that client, then that will amount a great much of recalling of the matters and the duplication of effort. Instead of that, if both the dates are parallelly extended, then I can complete client A's return as well as the tax audit work. Then I can go to client B, client C, so on. That will save our energy, time, etc. So probably we would naturally expect that due date should be extended. Representations have been made by ICI and various other organizations that the return filing date should also be extended. But we must not wait for any clarification. If something comes, it is welcome. Even if it doesn't come, we should be ready to file the return of income. Worst scenario, it might happen that after the filing of return of income, there is some additional disallowances which are reported in 3CD that may be taken care of by either filing a revised return. And thirdly, the last worst scenario, the consequences of a delay of filing return of income and consequences of delay in furnishing tax audit report are entirely different. As far as tax audit report is concerned, there is penalty in 271B 0.5% or 1.5 lakhs, whichever is lower, etc. But the consequences of non-filing of return are not that harsh monetarily. Even if the return is not filed by 30th of September, there are only two consequences. One, we lose the opportunity of filing a revised return, because only a return filed within 139 due date can be revised. A belated return cannot be revised. Secondly, 234A interest, that penalty might come. But there are Supreme Court judgment which says if tax is paid by the due date and merely return is filing delayed, then even 234A is not applicable. It's a different scenario. Department software and whatever utility they give, they do not accept it, and the moment the return is filed late, they will automatically calculate 234A. But the law remains as it is. There is a Supreme Court decision which says that if taxes is paid by due date and merely the return filing is delayed, even 234A is not applicable. So even if we are not able to file the return by 234A, it's not of a much draconian consequences as compared to the tax audit report. Coming to the changes in form number, firstly 3CA and 3CB, there is only one change. One additional paragraph is inserted or in fact modified. In my opinion and to the best of my information and according to explanation blah blah blah.